Well, the global economy is in a bit of strange phase right now. We've seen leading indicators deteriorating. If you look to Germany, for instance, Germany seems to be only full of bad news lately. And then, out of the blue, we see suddenly a really strong labor market report in the US. So there was a bit of everything lately. And in phases like these, I think it's very important to stay balanced, not only to focus on the risks and not only focusing on the positive aspects. If we do that, we come to the conclusion that the glass is a bit more full than it is empty right now. In China, the glass seems to be really full right now after the government announced additional measures to support the economy in the real estate sector. For instance, we see that interest rates will be lowered for existing mortgages, and that definitely caught the markets with a surprise. We've seen a strong equity market rally in China. That was definitely positive, but I must say the more difficult part after the initial response rates now, we have to see these measures being implemented, and they have to prove to make a difference. Well, the stock market rally in China was definitely a nice bonus for the portfolio, and it was a good example of how diversification works, not only in times of crisis, but also if you have a positive surprise. Chinese equities are about 30% of the overall emerging market equity index, so you could benefit from that surprise rally without having to bet explicitly on China. So that was definitely a bonus. Looking ahead, I think diversification might also be important more from a risk perspective again. If you look, for instance, at the developments in the Middle East, or if you imagine what could happen after the presidential elections in the US, that could be really difficult. Of course, we don't know exactly what's going to happen, but we know one thing for sure. With a well-diversified portfolio, it is much easier to follow these developments in a more relaxed manner.